This is the FCTO Daily Forex News Report for the 11th of April 2013. The Federal Open Market Committee meeting minutes, leaked accidentally prior to the opening of US bourses, revealed that many participants would like to slow the pace of purchases over the next several meetings. A few participants deemed it necessary to continue at the current pace at least until late in the year. Importantly, however, the discussion referred in the minutes took place before the latest indications of a soft patch in growth, weak ISM manufacturing and non-farm payrolls, which has clouded the outlook. However, the September or October meeting is still seen as the most likely time for tapering off purchases. Overall, the minutes did not change the general perception that weak data will prompt a continuation of asset purchases. US stocks rallied broadly, extending their push into record territory. The S&P 500 index rose 1.2%, led by gains in the technology and healthcare sectors. The gains are also spilling into Asia this morning, where particularly the Nikkei continues to perform due to tailwinds from the weaker yen. US Treasuries traded lower for a third day, sending the yield on the 10-year note some 5 base points higher to 1.8%. The Federal Open Market Committee meeting minutes, coupled with strong market sentiment, also seemed to weigh on demand at last night's note auction, drawing a higher-than-expected yield. Japanese government bonds continue to trade with heightened volatility due to the aggressive easing steps from Bank of Japan, and futures dealing were temporarily suspended yesterday as prices plunged. US dollar Japanese yen almost touched the 100 barrier despite Bank of Japan Governor Kuroda commenting that all necessary and possible measures have been taken. Nonetheless, Kuroda also reiterated the commitment to achieve the 2% inflation goal, keeping the door open for further easing. Euro-US dollar has managed to stay above 1.3050 despite the somewhat hawkish Fed minutes yesterday. It underpins that, given the latest signs of weaker US numbers, the Fed might not be in such a hurry to exit its quantitative easing program, but it's probably also a reflection that the market is also speculative short Euro-US dollar. US dollar Japanese yen almost touched the magic 100 level. The relentless rise might come to a temporary halt today on profit-taking, and as numbers from the Japanese Ministry of Finance showed that Japanese investors were net sellers of foreign debt in the week ended 5th of April. The latter is somewhat of a surprise given the vast anecdote information that Japanese asset managers went on a buying spree in eurozone government bond markets after the Bank of Japan changed its monetary policy the week before. Not a lot of action today. Speeches by Bullard and Plosser may give a little more insight into how the latest payrolls have affected the Fed's thinking about tapering of asset purchases, following the more hawkish minutes yesterday. Initial jobless claims are also due for release, but are likely still distorted by Easter and hence should be taken with a pinch of salt. Claims rose sharply last week to 385,000 from 357,000, but are expected to fall back to 360,000. The next big market mover will be US retail sales for March tomorrow, which will give us more information on how soft the soft patch may be. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.